nobody's expecting something, that's when things happen. Um, yeah, there was some news about Iran and Qatar and all that good, caught. Um, yeah, PPI also. So, just add that into the mix. All right. So hopefully you didn't get caught on that. Um, all right. So again, wind is blowing pretty strong already. So we'll just take it one step at a time. As you can see here on our charts, again, the ES is on the right for you NQ traders and faders. You're on the left. But basically, everything that I talk about as it relates to ES, again, relates equally to the NQ if that's your instrument of choice. You just basically adjust, but the patterns are going to be, nearly identical. So I don't really talk about NQ, but everything that we do discuss is relevant, right? So your choice. As you can see here on the ES, again, obviously, big range already. We have some projection levels down here, okay, outlined, and those projection levels, right, have gotten obviously fulfilled. So that's all Captain Obvious stuff. But where do we go from here? Well, we're going to let the market do its thing, all right, as we always do. We want to, let the market be, all right, the leader, show us what it wants to do, stay along with it, right? So, in dancing, right, there's one leads and one follows, right? So you can't have two leaders. So we'll follow the leader, which is the market. But we'll outline, we just, what we want to do is outline some, like, what are some of the, key areas that we can identify, right? So we know where the market broke, right, around the 67, 70, 65 area, right? And then we got the multi-day high volume node, right, in the area around 67.50. So if we get a little bit of a bounce, right, probably 67.50, right, 60 area, right, could be responsive activity on a bounce back up. If there's any further decline here as the RTH open, you can see we're in this area where prices right now kind of in this low volume void of a lot of activity. So, another scenario, the potential, if there's acceptance. So again, we're looking for either an acceptance or rejection, type of activity, right? So we don't know which is going to be, which will be which here, but um, we'll find out together. But if there is acceptance, right? So let's just write that. If there's acceptance, all right, down at these lower levels, there's an area here of very low volume curved out on the multi-day profile. If there's acceptance, this area would start getting filled in with more volume. All right, and price will stay down here. If when the RTH gets underway, if there is rejection to this area, where the big boys start coming into play, right, you'll get a move back up to at least a higher volume area, right, and then we'll take that one step at a time from that point on. All right, prior low down all the way down here at the 15, so we could get a break of that. So what we would want to watch for is, of course, our D-level money box zone. Let's go over to our chart there, right? So this is, again, 60-minute chart, straight up D-level money box extension zones beyond that. And what else? That's about it. I don't have a whole lot beyond that. We'll just stay flexible to the opportunities as they present themselves. All right. Obviously, a lot of people maybe a little shocked in the beginning overnight. They got kind of snookered with those news headlines. But again, our goal is to stay in alignment. let the market, show its structural hands, and then we'll jump in. Again, if you're a super scalper, you're just looking at, order flow and the such, and you're just, going back and forth with the moves. If you're a little bit more structural, you're looking for particular areas here. Excuse me. So here's another one. Here's another reference point. This would be the prior opening from yesterday, right? So 52s roughly. So again, if we get reclaimed 52s, we should probably get another, a move up towards the, 60, 65s area on that break point of that lower pivot, the overnight pivot. And then if we can reclaim that again, kind of like, the dominoes fell, and we got to repair the dominoes back up. But there's the big kind of cluster of volume that the market has been sitting in the past couple days, roughly the 40s, 80s, in that vicinity. So we're already down here near that 40, 35 target. All right, we had a 32.76 cycle day one range low projection. Uh, I mean, that just it tagged that near perfectly, like a tomahawk precision missile. All right, so we'll see if we can get that reclaim on the back side up. All right, that's it for me at the moment. We'll start the day in about 5, 6, 7 minutes. Manny is online with me. Hello, Manny. Good morning. No, hey, man, all good. I turned my mic off, so I didn't want to talk over you. Yeah, all right, but all good. You're the master of a run-on sentence. No, I'm only kidding. I'm only, I'm only kidding. I'm only kidding. No. Yeah, no. Easy Money says, "Ouch." No, no, no. We're all good. We love each other here, Easy. Yeah. No, we're all good. Everybody has their style. Everybody's great. No, no. It's all, you know. So, and no, all the stuff that Manny said, again, really uh, take down what he's, pick up what he's putting down, as they say. Um, Also, we have Mr. Jim Mayo posting here in the room, right? So again, if many of you, Jim is like the master, short-term order flow uh, trader here. So if that kind of floats, uh, into your style, so you can learn a lot from Jim. So great to have Jim. Maybe we'll get Jim at some point, and he can kind of outline kind of what he does and what he looks for. So yeah, all great stuff. The lineup that we have planned, going forward as we continue to build this out, and as we get feedback from everybody that's participating, we're gonna make whatever adjustments are necessary to bring the highest quality experience for everybody. So uh, everybody's feedback is vitally important as we move along. All right, so just kind of keep that in mind. If you have if you want to put something in the suggestion box, all right, don't hesitate. All right, I'm back with you, Manny. It just I'm coming off. I'm just going to turn the mic off when you're talking, just so I don't over talk you. That's all. In terms of what we're looking for as well, very close to what Manny was just saying, around that 65 area, we have a level on our charts on the middle bottom. You'll see kind of a red zone there, right around the 62, 63 area. All right. That is a particular zone of interest for us for looking for a short that's kind of a structural resistance zone, all right, on our work here. And we're looking for that. If price gets there, obviously it's not going there now, but if it gets there, that's going to be a reference zone for potential short play. And that's also kind of matches up with the breakpoint low, uh, the overnight low, previous overnight low, right, early low, as the break point around the 65. So that's a good potential structural area for rejection. Again, if it gets there. So that's what we're looking for. Other than that, we're in a long right now from a little bit lower. That's the middle top screen chart that you see on our work here. We scaled out at two levels. We got to stop pretty much at break even now, and that's all what we have going at the moment. All right, so I'll come on Mike as it gets closer to those levels. All right, Manny, I'm jumping back in, jumping back in the water. All right. So of course everybody knows today's Fed Day, all right? And so these are the kind of the rhythms that we've been getting the past couple of days. Markets made, moves to the upside, back to the downside, and then for us here, most of the day has been like a grind, between the rollover, and I think the rollover is estimated at this stage to be about 75% complete. So that's not really as much of a factor as it has been the past couple of days. So again, it's all about, Fed Day, but between the two, you're just getting this choppy, tight consolidation action. So we're just going to be very patient for our structural trades, right? And not overtrade. I mean, if you're a super scalper, all right, I mean, you have trades, all day long, right? But for the remainder of us mortals, um, we got to wait for a more structural configuration, all right, based on our plans. So, and then speaking of plans, just obviously keep in mind, Manny has outlines his plan every day. Great stuff to follow. If you don't have a plan, or if you're looking for a job with his, certainly follow that, or as an outline even, right? And you'll start seeing that the more you pay attention to levels and start seeing things respond, right? You can begin to formulate how you want to handle, your own. Did I lose? Did I lose the open range chart? Looks like I might have lost the open range chart. Okay, hold on a second. Oh, no, not that one. 4 shares. Okay, let me stop that one. And let me stop this one. Let me reset the opening range charts. Huh, that's weird. Um, let me start all the shares over again. Hold on a sec. Something's 1 second, everyone. What's also coming down in that area is you got your VWAP that's migrated lower down to 65 as well, 24-hour VWAP. So that, of course, that's gonna be another, kind of marker for, people looking to sell, right? They wanna get close to that VWAP as possible. So that's kind of getting right into that area where the 810, where we have the 810 and we're looking to short. We don't really even have any multiple tests of that. I would say, you probably the odds would favor a move higher, s- you know, sustained move higher if we had multiple tests, but we haven't really had any multiple tests of that. Um, so yeah, so I'm still looking to short if we do get the bounce into that area, but I'd be a suspect for long still until that, really kind of clears. And of course, that VWAP, everybody, you got all the VWAP traders looking to short against that, you know. Yeah. Manny, that raccoon. Holy moly! Holy crap! Yeah. I don't know, it looks pretty painful to me. In my other house, that we've, sold three or so years ago, um, we had, flyers, squirrels, flyers up in the attic, and, they took residency. You know, I had to evict them. I had to take certain measures to evict them. Didn't wanna do that. And then one actually, uh, got out of the so we had like a 3rd floor, um, you could call it like an au pair suite type of thing, but then there was a door to the attic part, right, where all the, air conditioning and everything was, but just a regular door. So I went in there, I heard something, so I opened the door and then, uh, put the light on. And as soon as that happened, I saw something like in a flash pass by my feet. I said, "What the hell was that?" And it turned out to be a flyer. Got out of that side of the attic into the house. I had to chase him down. It was a comedy session, let me tell you, trying to chase him down. Right, and I finally cornered him, and it wasn't pretty, but, and then it turned out that, we had, like, a family of flyers, in that side of the attic, and, it was during the winter times, when it gets cold, they're finding warm places to go. I think in your raccoon case, he's looking for a cool place to go. 'cause of the heat down there, 'cause of the heat down in Florida, right? But yeah, so J John over here in the PTG room, he says, "As a teenager, I used to hunt coons for years as teenagers." But you don't have to hunt them down in Florida, they'll find you. No, raccoons are they look cute, but they're nasty. All right, so not a whole lot happening here, folks. That A4 long that we had working did get stopped out on the balance, break even. Okay, as you can see, that's in our charts here. That's the middle top window, the small window there. You can see the trade. All our trades are displayed prominently on our charts, right? Entries, stops, targets, etc. When there is one that is valid, all right, in the structures that we look for. I mean, certainly you can take trades at any point in time. I mean, there's plenty of opportunities to take various trades. In terms of what we do, we follow certain structural protocols and things that kind of adhere to our plan. But one could look at a chart and then find multiple trades. You know, for instance, one could look at this action over here. I'm just going to kind of circle some of the. Man, you like your Epic pen? You like your Epic pen to draw on the charts? Yeah. Yeah, you'll learn how to write with it too from a mouse. But so so taking a look at the charts here, I mean, we don't have a trade on at the moment, so we can kind of examine some of the ideas and potentialities that we can look for. Yeah, no rodent is cute when Ram says over here. Um, but what when our charts here on the right hand side, the larger one on the right hand side, this is a 750 tick chart. All right, this is something that we've always used kind of forever, and on the ES as our execution chart. And a lot of the stuff that we're looking for is, what's the bias, right? What's the lean? We know generally it's to the downside, right? So we're really just primarily focusing on that side of the market. I'm not really looking to take longs. Uh, that said, we're looking for, like most people, right? We're looking for bounces. That's nothing new, right? There's no magic there, right? We're looking for bounces, but really we're looking for bounces where prices, kind of get a little bit extended to the upside. Now, what's extended? What's a bounce? What kind of constitutes, at some point where's the bounce, end and so forth, right? Well, we kind of, we look at our indicator here. Of course, this is a CCI. Many of you are familiar with that, but this is our own configuration we've used for years. But we're simply looking for what we refer to as a premium, right? Condition. And so that's when in a down move, down leaning direction, which we have, we're getting these counter moves right back up. And everybody understands that. Everybody, oh, I want to sell I want to buy a pullback or I want to sell a pullback. All right, that's nothing new. That's standard fare across the business. Some people may call these bear flags. All right, that's fine too. Whatever term you want to use it. The key for us, is at some point, at what point does the probabilities favor actual entry? Because if you take the entry too soon, you're going to get, you're going to take a fair amount of market heat against your position. And then in many cases, I've seen if you take the, short or an entry too early on a retracement, you have the right idea, but you just, a lot of this stuff has is timing. And so as a result, if you take it too early, depending upon your risk tolerance, you could easily get stopped out. And I've seen this many times. You could easily get stopped out at the point where you really want to enter. So we look at and we use our tool, we use our CCI, and what we're doing there is we're waiting for the CCI to get up into this premium territory that we've marked. And of course, CCI, any indicator is a representation of price, but this is a statistical representation of when price, right, has essentially kind of stretched to some sort of a limit point, right? In its retracement, and it's at that point the probabilities begin to favor an entry, right, for a rollover back down in this case. And also here, what you're looking at as well is you're looking at this is a 225 EMA, all right, the fat line there. So right up against the 225 EMA. Usually, again, since that's the average price over right 225 bars, and it's downward leaning, that usually will, suggest to us that, a potential good entry point on the short. But when we match it up with, I don't want to be too early. I want to try to time it as closely as I can, and how to do that is we use our CCI, and we're waiting for the CCI to peak up into those areas. So when you take a look how accurate the CCI, the way we have it configured, right? How accurate to those peaks actually are, right? So that's kind of a way of us determining, at what point do we want to take a short. Now, there's no auto signal here or anything, so these would have to be taken manually, whereas a lot of our work is done through an automated system. But again, if you just, if many of you are discretionary, manual traders, that would be uh, indications of, one, what's the lean, what's the directional lean, right? We need to identify that, right? So we have actually a decision model called the OODA loop, OODA, and what that stands for is observation, right? Orientation. So there's a lot of observation orientation going on, right? It's probably 80% of what we do is we watch the markets. And then the DA, that stands for decision action. So observation, orientation, decision, action. And it's a decision process, right? Model where you're observing, right? Observation, you're observing what the market is doing, what's the lean, right? Which is the orientation. So looking at the market overall and then determining what side should we be focusing on. In this case, right now, today would be the lean side on the short side. And then the decision action cycle, okay, is what type of, structural setups are we looking for? So if we're looking for shorts, well, what type of shorts are we looking for? Well, we're looking for, in the category of what we talk about, is premiums. All right, we refer to these as premiums. All right, so as such, our primary tool is CCI, the way we have it configured. So we know what we're looking for. We know what side of the trade to be on. We're just waiting for the structure to develop to the point where the potential for trade is high, and the potential for a lower risk trade, right, is also elevated. So we're looking for that short play to get in alignment with the short side. All right. So that is how kind of one of our primary tools that we use. And a lot of times you just got to wait for that, situation to occur. Like over here at the moment, this CCI is not even close really to the premium level, right? So if we zoom up to where it is, this is not really an entry point. It's a low quality. Could the price continue to roll lower? Absolutely, right? Because we are below moving averages that are descending. So clearly it could break, the low value here and move lower. But it's still, even with that, we know we certainly know I'm not really looking to buy that at this moment, right? And so the lean still favors, potential for downside, though there's not really a clean signal for us to take a new short entry. So again, in this case, we're in this observation mode until we're able to, finally get a cleaner signal that suggests to us a lower risk, higher potential entry point structurally. So that's kind of things we're looking for. So, and again, if you're trading this stuff manually, that's the idea. What we're looking for is these bounces. And again, people will call these bear flags, right? That's fine. Again, that's an accurate term, right? You get a down move and then you get a move up, down move, right? So these are just, retracements. But the key, and everybody knows this, as I mentioned earlier, but what fails a lot of people is, at what point do I enter? And the CCI kind of answers that question for us. So hopefully that kind of, as you're looking at the charts here that we're displaying, these are some of the things that you'll eventually learn to focus in on for your decisions. Okay. All right. So again, you can see kind of we got that rollover. All right. And again, if you're in a trade right now, from a higher level, again, the best thing to do is just continue to manage it. All right, to the downside. But again, could one have taken, a new trade there on the break of the value low? Yes. All right. Again, not a problem there if that's part of your plan. I wouldn't object to that in any way. Okay, because the lean remains down. It's very simple. I mean, you ask yourself, in this configuration, would I be really looking to buy this, right? Or, what's the current lean? And so, again, staying in alignment is one of the primary uh, directives that we have. Um, so in this case, we want to, can continue to stay in alignment with that short theme so far for the day. All right. Typically, on the Fed day, we usually get an upside lean heading into the Fed. Obviously, today, not the case. And so, if you have a determined bias that, okay, because the prior Feds days have been to the upside morning of Fed, I'm going to trade the long side because that's what it's been. Well, if you have, kind of a locked in, predetermined, bias in that, obviously today, that's not working well for you. We don't have predetermined biases. We want to always go along with whatever the market is showing us. Let the market tip its hand. It's not about getting the highest price or the lowest price. It's about getting an alignment where once the market's tips it has tipped its hand, all right, again, we just want to stay in alignment with that. And by doing so, again, um, increases the potential for more profitable outcomes. So not a difficult plan, but can be challenging to execute if you're not disciplined enough. So, again, anybody in the pit room, if you have questions, comments, feel free to post. All right. We'll give our guidance as best we can, but obviously, interaction helps our community, um, get better. So, if you ever have any questions, comments, feel free to post. I'm going to take a short 5-minute break and get some refreshments, and then I'll be back. I'm back, Manny, by the way. Okay. We're the only thing that we're in right now. Can you hear me? Okay. Oh, okay. Right. The only thing we're in right now is the A4 short. I'm just widening it out on the screen right now. We have a short up at the 28 quarters. We've scaled three on that, and now we're working a runner, and the runner right now is at break even. So staying in alignment with that, as we were talking about earlier. Um, okay, and that is also so if you take a look at the screens here, right? There's actually kind of two complementary. So we got the short over here that I'm highlighting, okay, at 28 quarter. That also corresponds over here on the other chart that we have is we were talking about premiums earlier, and where we would be taking our entries. And this corresponds, exactly to that structure. So what did we have? We had a move down, and then we had kind of retracement move back up. All right, and then at the point where the premium triggered off, or it entered that premium zone, that's the highest quality potential entry on a pullback. And then the Auto X over here on the left hand side did grab that. All right, the one on the right hand side did not. There was probably some other factors that didn't take that one. But what happens is if it clicks off on one strategy, it doesn't. The way our system is built, it doesn't duplicate the trade on another screen. So, but you can see here, it's short from 28 quarter. Again, we get three scale outs, right? And now with that, we have an auto break even that runs into place. Okay, so the idea of the final contract or final tranche, it's only a single contract now. If the market were to really run, kind of really take a break, I mean, that's where you can really pick up some alpha on that final contract. The final contract should not be, it should only help you, right? So we're willing to give something back on that final contract because we got out of the four contracts here, we took three of them out uh, at high interval scales, so high frequency scales, right? High probability scales, if we want to use that term. But and then the final contract here is just a runner. If in fact we get a good run down further, we can just pick up a lot more alpha. But if it pulls back here, we'll get stopped out, break even on that final contract. So that final contract can really help you, but it should never hurt you. So that's kind of how this corresponded with my discussion a little bit earlier about looking for staying in alignment for shorts and using CCI as our determining factor of when to actually take the trade. So we know we wanted a short, but at what point was the risk favorable to actually enter the trade with minimal, no risk, not no risk, but minimal risk, and for the market to again roll back lower. So that was the point there at 28 quarter. And that's the only thing we have currently active at the moment. Right, right. Did I come through on the audio on that, by the way? Oh, okay. Okay, gotcha. Yep. Yeah, sure, no problem. I would think the next play, for anybody interested would be, uh, perhaps a push below the prior low for that, kinda look below and fail play and a reclaim. That would make sense. And obviously, potential for a fair amount of stops below that level, and, that it's not lifting in any significant way now. Again, those trying to buy against that low, once again, their stops are gonna be, where they are, they're gonna be below. So, potential for a look below and fail, and then recovery. So that could be if you're looking for a long play, that could be a significant, uh, development if that happens there. Where would I look? If you look on my charts, let me just open it up here, make it a little bit easier to see. On the 60-minute chart, all right, we have something called the D level money box. So this is right here. This is the D level, and this area is the money box. So the D level basically is a level where that look below and fail type of play low and got down to the D level area. Right, this is typically where stops are going to be located in that vicinity. And so again, w- what's the term most people use? Liquidity grab, stop hunt, all those type of terms, right? But look below and fail. We actually call this a PKB, all right, peekaboo, all right. And again, it's just simply it's a look below, right, and fail type setup. So the idea would be come down, grab those stops, and then come back and reclaim the prior low, and that would flush out, all that liquidity, and so that could be a potential play on deck if it gets there. It doesn't look like it's headed that way at the moment, but it looks like it's stabilizing above that low. So that's something to kind of keep an eyeball on for a play. 67.15 as I have as the low. Am I not? I mean, that's a 2-day low. I'm sorry. Is that a 2-day low? Yeah. No, that's yesterday's low. No, that's yesterday's low. Yeah, that's yesterday's low. Yeah, so look below and look below that 15, get a flush down, right, and then a reclaim. That could be a play on deck if you're looking for a play there. All right. What was nice about those 15s that I mentioned in our room the other day was this. You were talking about a downtrend line on the 60-minute, right? So this was something I had outlined. You had a beautiful downtrend line. This was coming in yesterday, but you had a beautiful downtrend line. Two good solid hits, right, to form that downtrend line, and then you got a breakout above that downtrend line, and then the back test, like perfectly right against at the 15s, right against that downtrend line. I mean, it was just like textbook technical analysis, right? So now we're retesting, that we're getting close to retesting that area. So I think this becomes a critical spot for the market to hold or fold here against those 15s. So we'll see. We're here together. I'm gonna be around for about another half hour till 11:30 today, and then I got a meeting at noon that I got to prep for. So if anybody has any questions, comments, etc. Magister went long 26.75. It's good. Yeah, so that was nice, right? So that was again these high pivots right here, right? A nice break of that move, right? We got some buying underneath that surface. So nice trade there, Magister. Sorry about that, Magister. We'll call you Master. All right. All right, we're into this 810 area right here. We'll see if we get a response or not. We'll see if this plays out for us. We are short on that 810 at the moment. Okay, so we are, as you can see it on the screen there, we are short. We covered that A4. That's off the table, and we're on the 810 right now. All right, we're getting a scale, first scale on the A10. Now, this little blue line that you see up there that just painted, that is my average cost, right? We call it a theoretical average. So essentially, I can move my stop right to below, right above that to manage my risk. So that's the theoretical average. So what that means is when I take, okay, there is second, there's our second tag. All right, beautifully. All right, how's that? There we go. Look at that. There's your 810. This is the play that we've been looking for. All right, and they're working out really well. I'm gonna move my stop down now. All right, so how'd that play out for everybody? All right. Well, it's not so much, here's the thing, it's not so much a call, all right? I don't view it as a call. It's just, this it's a structural play that we're looking for, right? And again, we're looking for that bounce. Now, Magister, just call me Joseph, Magister says. uh, so Magister took the long. That was a nice play, for him. We were looking for a short against that 810 zone, and again, we got it. So both bulls and bears get fed, on a day like today. So just the thing is, you follow your plan, right? Our plan is is a structural one where we're looking for certain zones to respond, and you know, and you get it. So yeah, I mean, it's great. I'm not big on the term call. Yeah, that's a great call. I don't know. It's just, I mean, I could say, stop clock is right twice, right? So great call on the clock. Speaking of the clock, you haven't spoken too much about the clock lately. That's something that you may want to. Yeah. Yes and no. Maybe if you want to put on, like a short workshop, I think what I like to do, Manny, is before I start presenting something in real time, consistently, I always would like to do like a workshop on it. That way, everybody kind of, we have a recording of that, and everybody has access to a recording where they can try to absorb, what the concept is, and then at that point, creating it with, in the room, in the presentation. So that's kind of what I like. I want to do some sort of a workshop first. If you try to explain this stuff in real time with the market, nobody's going to pay attention. Uh, I mean, yeah. Yeah, I mean that's the thing. It's just everybody's real focused on their trading, and I don't do any really education. I stopped that years ago. Tried to do education in real time, and it's not really effective. Though the market at the time can give us some real good examples of what you'd want to teach, but in those cases, what I do is I take a notation of those days, and then I incorporate those, go back to those days as part of a real time presentation. Um but in terms of like, trying to teach something in real time, it's very ineffective use of the time. And because people are focusing on their trading, they want to know, what's the next trade, how are we trading. And so, speaking of which, the next trades, by the way, everybody, we did get we did, yeah, we did get stopped out, on that 810. Okay, trailer, so that was a good one. In the meantime, market shifted real quickly here, and this is a good example of a discount. Okay, that we were talking premiums before, right? Now this is a really good example of a discount where the market shifted, and we get that CCI came all the way down into discount land. Now a discount is a long, okay, and we got a pullback in the price right down to discount land, and the market, snapped back up and triggered off a long, and then we already scaled out quickly on two. All right, and then we have a third one up here, and then over here on the left, this is our A4 trade, similar to a discount but not a discount, and some characteristics of a shift, and then again long trigger in that. So this is all done automatedly. Again, half the time, if it wasn't done automatically, I'd miss it, manually. I mean, you got to be really hawking the screens very closely. So I do a lot of stuff have everything in an automated fashion. So when the when the criteria of those trades, are fulfilled, they're valid. It just takes the trade. Boom. I don't have to decide, should I take it, should I not? Because we're gonna, in most cases, we're always gonna, in most cases, we're going to talk ourselves out of the trade. It's not right. It doesn't look good. Well, what doesn't look good? You have to know what the criteria is. So, anyways, those are three, actually three trades. These are two are in the same direction, but they're different criteria. So that's why we have a trade on this side here as well as one on the left hand side. So those are two different, technically the two different strategies. So they don't, and they're non-correlated, but there is some commonalities to them in terms of direction and what we're looking for. So uh, this kind of screenshot right here is probably uh, the best that we have. Where again, all three, one was a short here, that played out, and we got two that were longs. Those played out. So again, today is a day where it seems as though both bulls and bears, getting paid. So, all right. So hope that is clear for everybody that you see on the screens. All right. No, yeah, I mean, one last thing is I don't call out trades. It should be impossible to call out trades. All right. So we're not really looking to call out trades. We're looking to discuss the structures, looking for what are we looking for next, what type of structure we're looking for. And then when those structures do develop, patterns develop, then that's when we take, the appropriate action. And so, this is how our strategy here at PTG unfolds. Again, Manny has his own strategy, and same, Jim Mayo when he was posting earlier, much more kind of order flow related. So everybody, a little bit for everybody in what you'll get with Pitbull traders. Check to make sure the JP had audio. Very good. All right. Yeah, this morning I'm coming off and on audio between the pit room and PTG, just trying to manage both rooms here while we're moving along. So, yeah. That's just been our primary directive, and partly that had come about back in the very early days when I left the investment banking. Remember I was a market maker for the investment bank, so I was your ultimate, fade trader. Okay, and so as a result, when I left that arena and I started trading on my own, I was still trading the same way. I think, oh, I know what the hell I'm doing, right? So market comes down and just, all right, I'll just keep buying those, and unfortunately, it keeps going against me. And for again, I'm trading, and the thing about when you're a market maker, you have layoffs, right? What are layoffs? Layoffs are I have orders underneath me, so like it's like having an automatic stop order somewhere, right? So if I'm getting long at a certain price and I have limit bids below me on my book, well, that's like a stop order for me, right? I'll just fill the bids out of my position. Yeah, I'll take a small loss, but it's like having a stop. Um, so when you have orders on both sides of the market all the time, you know where your risk is, and in some instances you're willing to take a fair amount of risk because you know where you can lay off your risk, and those are guaranteed trades. All right, for us, and if the price hits those levels, we just trigger them, execute them, right? But now when I left that arena and didn't have the layoffs, I didn't have orders because I wasn't working orders any longer. I was working just for myself. But I was trading the same way. Markets would come down. All right, I'll buy some there, I'll buy some there, buy some there, and then keeps going against me. Now I'm sitting in a position, with no layoffs. Like, okay, where do I take my loss? Right? I had to actually learn how to where to take losses. I mean, it was just, because it just wasn't part of, the way I had done business for many years as a market maker. So I learned the hard way. And so, going against, a momentum move, directional move, is, again, it can be, it's like death defying, financial death defying. And so I had to learn, I did learn the hard way. But, and not to get into a long story, but, there was a time where I was trading QQQs at the time, and not only did I have to put up, a fair amount of capital, my own capital, right? Because it was not like futures, but um, I was lugging a fair amount of my capital base in a single position, and I kept rolling options, against it over a 3-month period, and I was holding it for 3 months. So ultimately, the at the end of that period, my net loss was about $7,000, but it was much, much deeper than that. And the market did finally come back somewhat. And as it turned out, it probably took a few years off my life. And then at that point, um, I took a break, and my wife and I flew around the country for a bit in my plane. And I said, well, I don't want to lose my airplane either, to a loss in the marketplace. But nonetheless, we took some time off. I took about 3 months off. And again, working for yourself, you can do all that, right? But I took 3 months off, and, I had to kind of really clear my head. That was a harrowing experience. I remember my wife, we would always walk in the office, my home office, and she said, remember, you're not trading UBS money. 'Cause I traded, I was at yeah, I was at UBS, United Bank of Switzerland, right, at the time. "Remember, you're not trading UBS money." And yeah, sure enough, I wasn't trading UBS money. Alright, but at that point, during that time off period, I just said, I just can't do this, not like that." And so I had to kinda really revamp everything, that I did and how I did things. And then I made a pact with myself that I would never go against the market direction ever again. And so it became my prime directive, and I haven't since. And that's something that I've continued to hopefully instill in everybody. you want to fade a level, and when I'm talking about fading a level, it's okay to trade at a level for a trade for a bounce, and I still do the same thing today. I'm talking about lugging a position and then trying to average down into it to try to get about martingale trading. Company at the time, I should have just created a company called Martingale Trading because that's exactly how it was, acting, right, in my trades, right? Everybody knows that, the better type of trading is anti-martingale trading, right? So, uh, you know, but in any event, so that was a lesson, well learned, and we all tend to learn the hard way. As much as I try to give direction, so folks don't, experience the real negative drawdowns. I think most people have to learn. They have to have it stuffed in their face before they. All right, I'm going to be heading out here in a few. All right, 11:22. I got a lot of private messages here I got to respond to. All right, so all right, I'm going to come off. I'm going to come off the pit room, and I'm same with PTG. So, all right, thanks, Manny, for your direction today, and I hope everybody here got some educational benefit out of what we're doing and how we're presenting. Again, always, the suggestion box is always open. Um, this is how we're starting it, but suggestion box is always open so we can improve upon, our uh, daily presentations in the pit room for everybody. All right, I am going to sign off. I'm going to get some refreshments and I get prepped up for my noon meeting. So have a good day, everybody. I will leave my charts up as long as they stay up. I don't know how long. It looks like they're coming up and down here. I'm not sure what's going on. But I will try to reconstitute my charts up on the screen. All right. All right. Thanks, everybody.